Good afternoon, Scott with T3 Live. Welcome to today's recap. So, pretty down day on Wall Street, following the lead of China. You know, I'm sure you've heard all day long on TV. China was down 8.5%. It was funny. Their headline said that China down because of U.S. market weakness last week, and obviously headlines today say U.S. markets down based on China weakness. So whatever it is, you know, the composure just keeps changing, and the action is fast. And either you have to be, you know, moving quickly, or you just have to pretty much be out of the way. You know, last week we talked about the potential of a pause after failing at highs for new highs, but we had to hold 2100, you know, or 2110 to show some commitment to the move off the 200-day. So anyway, you look at the S&P, you look at the SPX, and you'll see, you know, here you are. Here's the top end of the range. Remember this lower pivot? Pretty funny. This is when this small range broke to the downside, right here. You know, giving you a move to the 200-day after going back and forth for a while, broke above, went all the way back to the top end of the range. Top end of the range quick. So, in other words, if you happen to have gotten, you know, early short, they just say, you know, you're like, I don't believe this, I'm shorting here, and then you added, and said, okay, what am I going to do now? Or just say you even waited. Just say, like, you know, you covered, and on this doji, like, okay, I think it's going to break below, head back lower, and you know, all of a sudden, pow right to the upper end of the range. You probably had to cover also. So same way on the, you know, on the downside. You know, here was this move, and I remember even for me, like I pretty much, you know, got a little long in here, you know, and then tried to hold some kind of portfolio approach all the way up. Sold some early, and then right here, I'm like, okay, let's see if we could hold the 8-day. Let's see if there's some commitment in the market. Let's see if there's, you know, some decent retracement rules. Okay, so that's where we got this at 2110, if you remember. And then I'm like, you know what? Maybe we could even see a little bit lower. You know, 2101 wouldn't be the end of the world retracement-wise. You know, if I'll do this after, but we talked about the Fibonacci retracement where from the low, you know, to the high, you know, you had this being was like your 25. This was a little bit lower. So anyway, you know, push comes to shove. Last week on Thursday, you know, that happens. That got a lot of people out of a lot of their longs. You know, and then it was like, okay, maybe they just shook it up and we could hold here. You know, let's use 2098 as a stop, and if you did, you know, you didn't get caught in that. And then after that, you know, today you had a small down day. So lo and behold, the question is what's next? And to be honest, it's hard to tell. You know, after 5 down days or 1, 2, you know, with the oscillator at minus 65, makes it very hard for anyone to be sizable short. If you were looking for a short, maybe that was your spot, or this was your spot, maybe you covered into today. But you know, if you're playing an oversold bounce versus the 200-day or versus the lower end of support, you know, you got to be careful too, because you know, risk could happen fast. And as you see it, we're just in the bottom end of the channel, and this has been, you know, you can navigate it, but it hasn't been easy. Looking for cues, you know, the cues, looking for cues, clues. The cues had its breakout type failure, okay, where it gapped up. This is almost even like an island top somewhat, not really, but anyway, broke below the 111, you know, came in still, but you know, the bulls, glass half full, it's only at the 50-day, while the S&P is almost at the 200-day. Glass half empty. We couldn't hold the prior breakout resistance area that turns into support, and now the question is, you know, can it stay below this? Because if you remember what happened with the Russell, Russell had a really nice relative strength breakout here, and then it failed. So it failed, came in, bounced back up, got rejected there at price, and now look at it below the 200-day. You know, at some, you know, pretty big support. But again, remember we were talking about how this time we didn't get back to the upper end of the range, or it didn't show relative strength. So that was probably your spot to be short, maybe here on this outside day. And at this point, maybe you covered a little bit, but I don't know if you could be long there, because again, from where we've come from, you know, I guess you could draw, let's see if we could draw some trends here. You know, this trend basically broke somewhat in here, and now we're on the right side of it. Some people would say that this is a little bit of a head and shoulders top type pattern on key support, so maybe it bounces here and then we see where it gets rejected. But all in all, no momentum, you know, no continuity, especially this time around when, you know, had a false breakout, bounce back to it, and then down. So you want to make sure that the same thing doesn't happen in the Qs where you have, you know, a false breakout. So we'll see, you know, what happens on if we get some kind of reflex move up, and whether or not this then gets rejected for lower prices. And that would tell us that, the market could have lower prices. But with all that said, there is still money to be made. Today in my note, I focused on whether Amazon could go green, whether Google can go green. I was a little skeptical on Facebook and Netflix because I figured maybe they could play some downside catch up. And Apple was like a no trade because it's just at the bottom end of the range and we'll see what happens there. So anyway, doesn't look like much, but Google, did, give you a decent trade. Okay, we talked about this being your pivot, which was right here. Okay, it opened up lower and then went through 653 and ran pretty straight all the way to 667. When we talked about this being your resistance. So here was your bounceable spot. And that's $11 amongst active traders and friends. So there is money to be made there. So people want to talk about how do you make money in a down tape? Well, here was your red dog reversal, right around 653. So that's about $10. And some people would say, look at your H pattern setup, where here was your, you moved down, and then it created the H to short some resistance, then to see whether or not it continues to the downside below this. But this is one of the stronger stocks, so it's harder to do the H there. But all in all, nice reversal here if you focused on it. Gave you 10 points. Amazon also gave you a nice reversal. Let's go to the 5-minute chart on Amazon. Why is it? Go to the 1-minute chart because basically, it was only 2 days. So anyway, go here. So this was, let's see if we can get you a better look. Better look. There it is. So here was your down open. So once it cleared back above the earnings pivot of 529, gave you a quick move up to almost 535. So that's $6, pretty quick. Then if you didn't want to do the first move, you wanted to see what happened. Okay, it actually held higher here when the markets made new lows, so it showed you relative strength, and then went another $9 before, trickling lower the rest of the day. But this combustible move where people don't know what's going on, if you were prepared with 2 different pivots, you did pretty well. Okay, and those pivots happen to be the gap. Okay, this is your gap right here. Okay, that was your 529.35. Opened at 526. Once it went above there, you could have bought it versus 526 and it went as high as 544. So that's the way you trade these ranges if you're not looking to have swings on and you're just looking to, make some cash flow. Then you have Facebook. Facebook, we talked about, can it stay strong? Well, a lot of the other sectors are getting pressured. So here are the Bible pivots. Right up here, remember, talking about selling the strength, not knowing what would be next. But anyway, here is your recent pivot. It did close below 94.81. So some people that like to be short might be short this, but it is the strongest stock on the board. Okay, the indices are down near the 200-day or the 50-day, and this just broke the 8-day. But again, as a momentum trader, things break the 8-day. If it already had earnings, I would say probably reduce. But since it hasn't had earnings yet, it could, be tricky. And at this point, going into Wednesday's earnings, it could test the 21-day and trickle lower. So we'll see what happens tomorrow. We know what today's low is. I actually made money short this today, 93.81. So at this point, does it play a little bit more catch-up, or if we bounce tomorrow, does it snap back quick? So we'll figure that out tomorrow. Same thing for Netflix. Netflix, with Google going into its gap and Amazon going into its gap, we talked about the potential of Netflix trading below yesterday's low or Friday's low of 108.90 or below 107.68. It closed pretty much on the lows here. So is it a trap, or does it want to fill, a portion of this gap where there's still room in this gap to fill? It's had a long move. All in all, on the day, it looks like, you would get some downside follow through, but overall, look, it's just breaking the 8-day, whereas the spiders are all the way down near the 200-day. So relative strength there. So it's a tough spot. So sometimes, you just be even flatted. Wait, if it opens up tomorrow, maybe you short it. If it opens down tomorrow, maybe you buy it. And not have overnight risk just in case China's down a lot or whatever. So here's your doji now in the spiders. So tomorrow we'll see, does it go above this and retrace a little bit back up, or does it go below and test the 200-day again? Overall, this 200-day is getting a little bit more meaningless. This actually is becoming a bigger area now below it. High end of the range, this is when it failed. We talked about this being one spot to make an adjustment around, and then if the market was any good with any momentum, this should hold. And this is where we are. So, you know, if you sold here and sold there and like, you know what, I want to have some overnight risk, then maybe you took some overnight risk. Okay, you know, risk reward, not so bad. But again, this has come a long way, and we haven't had any real downside. So at some point, you know, they might not save the tape. So you go to your weekly chart. You know, what's the weekly chart telling us? We had a pretty engulfing down week, but we've seen this before, closing below the prior week's low. So, you know, and this is major support right here. We'll see what happens. As you can tell, you know, I'm kind of lethargic, or I have not much conviction either way. You know, I feel like the market should not have come back as much as it did if it was going to make new highs, but the market likes to push everyone around. So, you know, if you shorted early after that move above 2085, you probably took it out to the woodshed. Same way, if you started buying last week and you didn't use, you know, the 2100 or 2110 as a stop, you probably sold into late Friday or maybe even today. So both ways, it's been tough, you know, tough and tricky. You know, Tesla, everyone's like, what happened to Tesla? I'm like, you know, to be honest, it got downgraded. So I remember I was long here. I got out on that day, lost the 8 and 21 day, which is a momentum trend, and you know, broke below the 50 day. So that's what happened to Tesla. You know, if you want to draw a trend line like this trend line from the low, you know, broke above, came back below, pretty much retested it here, and gave you some downside follow through for those looking to be short. And now at this point, it's neither really strong nor weak, and you know, who knows really what's next here. You know, you got to wait till earnings. You know, sometimes there are key inflection points when things change, like this did here, and then put you on notice that it could be a good long, and then that happened, and then it's been a good long since, and then all of a sudden from the short side, you have another trend type scenario where it's been following the 8 and 21 day, all the way, you know, broke it below here, came back above it. This was the trap, and now it went on the right side of the trend line, back below the moving averages. So who knows? That's when momentum leaves. With these high valuation names, when momentum leaves, you leave. And right into this spot, momentum somewhat left. You know, so that's what happened to Tesla. Let's see, MBLY, talked about it being a little, you know, choppy up here for the active trader, that if it broke below the 8 day, it could test the 21 day, which it did, and came off it. That's what it's been following, this 21 day, ever since breaking above the last pivotable, you know, pivot to buy. Earnings, I think, are next week, so we'll see. Overall, I still believe in the concept, and I still believe in the stock, and the question is, how do you want to do it? You know, did you put it in the drawer when it broke the downtrend here, or when it did a small red dog reversal there, or did you do it here? So for those of you who feel like you know, did really well navigating and selling here when it had the outside day, or selling when it broke, you know, the 8 day moving average, just remember, if you don't buy it back and you want to be in long term, and you know, we figure out what comes out next quarter's earnings, if it goes back up and, you know, heads to 70, 80, yes, you had a good sell here, or even a good sell here, but if you didn't buy it back and you have a longer term objective of keeping it in the drawer, you just better be able to come back to it. As far as the banks, Goldman Sachs, what a move. Before I left for my weekend trip, I was thinking that Goldman Sachs was a buy. That's what I was thinking. That's what Red Dog was thinking. Red Dog was thinking right here that if it were to get above 214 and the banks remain strong and we're going to make new highs, it would have to go up. So I was long it overnight, bought some here, and then it had this day, an outside day. What did Red Dog do? Said, oh, you know what, I'm wrong. You know, S&Ps broke 2110. This was lagging versus the rest of the banks, so it was a little speculative as it is. So I'm going to get out, got stopped out, and didn't get caught in that, and I wasn't in today. So now the question is, you know, did it come in enough to bounce? So it's off the lows. When the market was coming in the afternoon, it stopped going down. So maybe there's a bounce back up. But overall, it needs time. You know, it never really regrouped once it broke this, you know, actually you can go do it like this trend right here. You know, and then especially this accelerated trend when it was above the 8 day for so long. Even, you know, you could say Bank of America, all in all, held the 21 day and held the gap from earnings. So perhaps we can move forward and trade versus that. You know, maybe even Citigroup's better because it's not in the news with the management shakeup and this and that. So here's your prior breakout. Came into the 21 day, so we'll see if this holds tomorrow. What did gold do? Did gold have any follow through to the reversal? Not much. What did the miners do? Any follow through to the reversal? Wow, not much. You know, these things tried to push above the pivot and failed, so still choppy. This is still intact right here, but, you know, I'd be careful. You know, below every moving average under the sun, so if anything more than just a trade, you better just be able to have some quick feet. What did oil do? Oil still trickling. Good lesson to be learned when, you know, when even, you know, a lot of guys try and catch falling knives, and, you know, that's the way to put yourself out of business. Right here, when it lost the 8 and 21 day and the 200 day, it became a short or a sell or not own. And then when it broke its macro trend here and stayed below it, that was your other clue. Then you had a, you know, somewhat of a bounce, right, from here back up. Did it take back the 200 day? Did it, you know, retrace a heck of a lot? No. Did you have a small area where it could have, you know, wedged and went back to the upside? Yes, right? This could have been a decent sized spot for it to continue the move off the lows, and here was your outside day there. Okay, but you had to watch it closely, because once this range got tight, what did it do? Broke to the downside of it, and then obviously look where it went. So, you know, that's how you know, drown out the noise and look to see what's happening. Same thing with the XLE. My goodness gracious. You know, biggest companies in America, dividends, this, that, everyone said every dip was viable, but here's when it broke, you know, this little head and shoulders pattern, right? Remember that thing that we talked about? And then got below the 200 day. Remember the rule, if it stays below the 200 day for 3 or 4 sessions, not only does momentum leave here, but institutions leave there, and it's been below it ever since. Then your most recent pivot was the move off the yearly lows, and look where it is now. So when people on TV go, how did this happen? There are ways to technically look at the charts and figure out how did it happen and make adjustments around it. So here we are Monday. We have the Fed on Wednesday. We have some earnings after the close, but the bulk of the earnings are out of the way. Are we oversold enough for a bounce? Probably. You know, but are things bent? Yes. Are they broken? Not necessarily broken, but, you know, definitely have lost momentum. But we've seen this before a few times during the course of the year, where as soon as they look their worst, you have to buy them. But one of those times when they look so bad and you probably should be out of the way, you know, they might not get saved. So we'll see what happens with China tonight. It was down 8.5% yesterday. We'll see if the Shanghai makes lower lows. That would create some momentum. We'll see what happens in Europe, and then we'll see where we're at, and we'll navigate, you know, accordingly. You know, if you want it to be flat overnight, there's been more than enough movement to make money either which way. So I don't blame you. I'm actually flat again. I was leaning long just to be in stuff just in case we gapped up. You know, I wanted to be involved just in case they don't give us a chance. Figuring that if we gapped lower, I could add to it, but I decided to just take a step back and, you know, put some green days together, get a little bit more clarity, and then, you know, take it from there. Scott Redler, T3 Live, the recap. Have a good night.